Investors, fearmongers do one thing better than everyone else I know. What's that?
This is going to be the biggest crisis in the baby boomer's life.
We haven't seen the crash yet. It's coming. It's the biggest in world history.
I think we are in for the biggest bear market that any of us have ever experienced.
That's spreading fear and conjuring up the latest and greatest rationale for U.S. investors not to be invested in equities. Harry Dent, Robert Kiyosaki, Robert Prechter, and Jerry Grantham, all noted doomers, all horrifically wrong on their outlooks for U.S. equities over the last decade. Investors, since the COVID pandemic ended and the Russian-Ukraine war began, one of the loudest arguments for anti-equity and anti-American investment, more specifically, has been something called de-dollarization. Okay, so what is de-dollarization, and should you be losing sleep over it at night? The punchline answer is no, don't lose sleep over it. Don't worry about it harming your domestic investments in the next few years. But yes, keep an eye on it because it will create opportunities here and abroad. First off, what exactly is de-dollarization when financial folks discuss it? Well, it generally refers to a significant reduction in the use of US dollar in the world of trade and finance. I'm going to reference the DXY index as the dollar index in this piece, as it's probably the broadest and most common measurement of the US dollar versus our trading partners and other world powers. Okay, so take a look at the current weights in the DXY index of the 6 currencies that make it up. Now look at the 20-year chart of the DXY index. In this chart, up and to the right indicates the dollar getting stronger versus our trading partners. That is, our currency is more valuable in trade, not less. And remember, investors' currencies are a relative value game wherever you look at them. One country's currency is strengthening at the expense of another. Given the trend in this chart, what makes doomers so loud and vehement about their, so far, very wrong prediction of the dollar's demise? Why are many economists and alarmists concerned about the trend away from the dollar into alternative currencies? So first and foremost, a less dollar-central world might mean a redistribution of power, influence, and economic leverage away from the US and into other countries. It could possibly lead to increased volatility and uncertainty in financial markets. The most visible proponent of a de-dollarization has been, you guessed it, China. Knowing that the holder of the reserve currency of the world has special powers, China, under President Xi, has sought to increase the use of its own currency, the yuan or renminbi, for cross-border transactions when it can. As China tries to broaden its economic power, the rise of the yuan would represent a challenge to the established order of the US dollar, the reserve currency. In 2010, less than 1% of China's foreign trade payments were settled in the yuan, compared to over 80% in US dollars. By March 2024, over half of Chinese payments were settled in yuan, marking a doubling of its share in the 5 years since COVID ended. Where else are there early signs of de-dollarization? Folks, in the commodity space, especially in oil, traders are increasingly pricing transactions in non-US currencies. Some of this is due to China's reliance on Russia for oil and energy, but subtle shifts are coming out of the Middle East as well. Since the Russian-Ukraine war broke out 2 years ago, there have been further concerns by our US trading partners over our politicians weaponizing the dollar and using it as a US foreign policy tool. As a result, there's been a growing interest in finding alternatives to the US dollar. Investors, in mid-2023, at the 15th annual BRICS Summit in South Africa, Brazil's president called for the creation of a common currency for trade between the BRIC countries as an alternative to the US dollar.
Tenho defendido a ideia de adoção de uma unidade de conta de referência para o comércio que não substituirá nossas moedas nacionais.
The BRICS are countries Brazil, Russia, India, China, and South Africa. According to Jean-Francois Robin, before the Russian-Ukraine war, the share of Russian exports denominated in yuan was around 1%. Today, as of mid-2023, it's about 15%. Other minor data points are that Argentina announced that it would repay parts of its debt in Chinese currency, and Pakistan recently denominated oil import contracts in the yuan. Over the last decade, both China and Saudi Arabia have reduced their holdings of US treasuries by over 40%. So mathematically, yes, the trend is slowly moving away from trading taking place in the dollar towards other instruments and currencies. But has it made a difference to the US consumer? First, let's look at the US dollar versus another common store of value, gold. Since 2015, gold priced in dollars is up about 145%. Over the same period, gold priced in Chinese yuan terms is up almost 200%. Folks, neither currency has been a good store of value over the last 10 years, but the Chinese yuan has clearly weakened, not strengthened, against the US dollar over the same time period. Take a look at the dollar-yuan chart for the last 10 years. Up and to the right is a stronger dollar and a weaker yuan. Investors, I think it shouldn't come as a surprise that the Chinese yuan has weakened against the dollar, even as China has tried to diversify outside US dollar trade. To me, it looks like the yuan weakness is highly correlated to Xi's movement away from capitalistic tendencies and back towards a more centralized communist rule for China. Investor, your money goes where it's treated best and most fairly without friction, be it taxes or government intervention. Is the US dollar really going to be supplanted by a currency of a communist or centralized planning government like China? Do you really think the Russian ruble, with a Russia controlled by a dictator, will supplant the dollar, or the Brazilian real when that country is struggling, or any of the countries in the Middle East given the concentration of their economies in the energy patch and the tendency for wars in that region? I don't think so. Recently, following Donald Trump's re-election to a second term, many in the media have focused directly on the effects of his policies on the US dollar. For what it's worth, here's an overlay of the DXY in 2016 and 2017 versus 2024. So far, the dollar is doing nearly the exact same thing it did in the fourth quarter of 2016. Back then, it rallied strongly on Donald Trump winning the 2016 election. However, investors, it then sold off in 2017 with the tariff talk, with strong domestic and global growth, and inevitably the weaker dollar helped multinational earnings in 2017, leading to higher stock prices. Investors, I get the need for doomers to constantly grasp at the next fix. This is the tipping point moment. Maybe they need to sell books, subscriptions, or charting services that worked once and got them labeled a financial guru or a top caller. Or maybe they want to generate clicks and views for advertising dollars. But are their opinions or scare tactics helping you in your financial situation? Yes, investors, there is a movement away from fiat and paper currencies into digital form. Bitcoin believers see Bitcoin as the future store of value and future digital currency. Given the performance of the Bitcoin asset, regardless of what currency it's been held in since 2015, it's hard to argue with them. It's up over 45,000% since I first heard about it in the summer of 2015. I can find few assets, if you want to call it that, speculative or not, that have been approached that return. Maybe this is the new global currency, even though few trade in it, while many are trading it. Investors, the world has been moving towards a digital world for the last 50 years, moving away from bills to bits and bytes, moving away from coins to Coinbase, moving away from banks and bricks to bits, clicks, and swipes. My sons are both 27 and 24. They will rarely, if ever, stop at an ATM to take out some cash on the way out to date night on the weekend. Investors, they'll never, ever enter a bank lobby unless it's to secure a safe deposit box or sign a mortgage document. Even then, they may never do that, given the likes of DocuSign and Adobe e-signature technologies. Investors, against the nearing decade-long doomer calls from the likes of Jeremy Grantham, Harry Dent, Robert Prechter, and Jim Grant, and a myriad of retired billionaire hedge fund managers that come on CNBC almost monthly to scare viewers, what has happened? While the world might try to shift away from dollar dominance, it should be a long road for that movement, given the horribly unstable and unfriendly alternatives. Investors, it's still a bull market. The dollar is still the default currency of the world. And as investors, Martha Stewart would say, at least for investors,
now that's a good thing.
For myself, from everyone here at Oak Harvest, the investment team, from James, Troy, Jessica, and everyone, have a great Thanksgiving.